As you can see here very clearly, it's all about getting a strategic advantage when you sell the put option. Hi everybody, welcome to a very special video. Today's topic is very interesting. Today we're gonna talk about put option selling. We're gonna talk about how to really adjust the trade. I'm going to give you all nitty-gritties of it. Put command. Before we start the strategy, I have to tell you standard disclaimer that any strategy which you learn contains certain degree of risk. Risk cannot be zero. This is for educational purpose only. Now, knowledge which helps you become a better trader. Selling put options. Let's address the number one hurdle when you sell the put option. Let me show you and then we're going to talk more about this. So here we are on an option simulator. I'm giving you a hypothetical, the real world example, how it really works. For example, today is 1st of October and a trader, for example, if I decide to sell a put option, right? Put option of at the money. And selling a put option is a very common strategy, not recommended, but very popular. People do sell options all the time. Now, when you sell a put option, obviously your view of the market is that market may just simply go up. People do this kind of strategy a lot in stocks as well, right? We're going to talk about this a little later. But here we're going to talk about something which is super practical. That is, suppose that if you sell a put option and market starts to go in your favor, then how it really plays with the psyche and how we can really make it better. For example, if market really starts to go in our favor, then what we see is that upside it's limited. Doesn't matter if market really go up by 5% or 10%. On the upside, what you see is that it really plateaus. But on the downside, if market really crashes, then we get to see quite a big negative if market starts to go down. Also, when market starts to go up slightly, then that becomes a decision point for a trader whether to exit the put, whether to hold on to the put. So maybe a market or a stock gives you a big breakout, but if you sold a strategy, then it plateaus. The potential of it is not increasing. How to maneuver around it? Let's go ahead with this, and then I'm going to tell you strategically how we can play this a lot better. Now let's see, we go ahead by one day, and naturally October series was quite a bullish series. So we picked a bullish series, and what do we see? In just matter of few days, market starts to go out in our favor. We understand that. Now this becomes, in practical trading, is very different as you know it, right? Now here on this exact point, it becomes a decision point for a trader whether to stick to the trade, whether to exit some, what to do, because maybe market has already given a breakout. Now, how to play this in real time? What I would do in this particular situation is I'm going to tell you, because here if market continue to go up, like I told you, it's a simple plateau, right? Nothing is going to happen here, as you can see, right? It just plateaus over here, right? Now let's see. At the same time, I want to make sure that I remain in the strategy and have a strategic advantage in this. So let's talk about this. So here, what do we do? The step number one is that I look to remove the put. A lot of people, what they try to do is that they book the put and they make the put at the money. So they roll the put up. When you roll the put up, the risk is also increasing quite high, which we do not want to do, right? It becomes very, very risky. It's not really recommendable. Also, people sell multiple lots of put. Again, we can do something slightly different. Step number one is that we look to remove the put immediately. So here what do we do is we remove the put at the money. At this time, put is trading at 163.55 because obviously market has gone up and we have sold the put. Then we open option chain, and what do we do is exactly on the same time when we exited the put, we look to long the future. Exactly on the same time. And then since we are on the same option chain, and obviously a monthly option chain, we track where at the money option is. At the money is roughly 25,000. Now what I could do is probably I could go out of the money, 25,500, slightly out of the money, right? And here I look to sell 3 call option, and as a cover I like to buy option as well. So in short, selling roughly 20 delta call. But obviously we don't want to sell naked option. So at the same time, we look forward to buy, because selling naked options contain higher degree of risk, which we do not recommend. Now, what we did is, in a summary, we exited the put option if market starts to go in our favor. Exited, we long the future, right? Roughly, more or less, selling a naked option versus longing the future will have, some kind of a similar margin, not much of a difference. Although longing a future might ask you for slightly higher margins, I want you to check with your broker. And then after that, we make a credit spread. We make a credit spread on the call side. We sell 3 and we buy 3. Now, what we have done in this will be visible to you, and you're gonna get this trick. It will be very clear to you. Now, let me show you the payoff chart, and everything will really jump out of the screen for you. Now, here what you see is that after doing this adjustment, a couple of things should really stand out for you. Point number one, if we do this versus if we just simply hold on to the put. Now, what the strategic advantage this may have is that if market continue to go up, what do you see versus if we just simply sell the put, then the graph plateaus. Also, in terms of margin, because we are not longing multiple lots of future or selling puts or bringing the puts closer, all these usual common practice, because we have modified our strategy when we were in the advantage of it, you see things to turn out for us. And obviously, if market go down, then the risk will always be there. This risk which you see the red side, this was there even when we sell a put option even then. Now, if market is really bullish or your stock, and the stock or the index start to move in your favor. Also, in just next few minutes, I'm going to tell you if you simply just compare this versus just a plain vanilla sold put. So let's focus here. As you know, market has gone up and we modified the strategy. We long the future. As soon as we do it, we also sort of sold the call option as well, the spread of the call option, and now market is obviously going up. And what you see here is that naturally when the market go up, then we look to have some kind of a predictable outcome when we modify the strategy. Now let's compare the same market, same thing. If we do not do this, if we just simply sell the put option, or if we roll the option, right? In that situation, how much of a difference it's going to make? Let's talk about this. In fact, I want to show you right here on the simulator how it is expected to be. I want you to focus here exactly on the same day, 23rd. If we sell the put option and if we do not do anything, if we just hold on to the trade, right? In terms of downside, the risk will always remain the same. But on the same exact date, on the same exact time, if we just simply hold on to the option versus if we modify it, you could see how much difference it can actually make. Versus on the downside, the red is always there. Like I said in my other videos as well. Option trading is definitely an art. How to maneuver your trade, how to have a strategic advantage when you're trading any strategy. And short selling put, I told you in my previous videos that I'm going to come out with something very powerful. If you've been selling put, and there are a lot of people who sell naked options, right? Not recommended, that's a secondary part. There are a lot of people do that, and even they do it in stocks as well. So this is a good perspective. Now I have some more things to add to this. So common mistake, let's talk about the common mistake. It's important not to just rush the adjustments immediately or do it too late. So basically when we are in the trade, there always a time which comes when it's a deciding factor for us whether to exit or whether to do some adjustments, what exactly one need to do. When people talk about and think about adjustments, it's always about reducing the losses or doing delta adjustments. We know how about delta adjustments, right? How that works and how do we expect. Anyways, leaving that, let's talk about better things, right? So when the strategies swing in our favor, then how to get a competitive edge, that is something which, not really discussed online as much. This was the upside adjustment. Now, I'm sure most of you must be thinking, if market really start to snaps back, in that situation, on the downside, what kind of adjustments which one can do? Let me know in the comment section if you really want to know the part 2 of this video on the downside, because upside we have covered in this video. Exact reason why I say hit and trial way of trading one must completely avoid. It's all about improving on your trading and learning better things, learning other alternative way to do the things. In options, there are many things which a trader can do. So I'm sure you must have enjoyed the video and you got to know next time if you're selling a put option or if you see anybody selling a put option, how you can really turn things around. That was the whole motto of this particular video. If you enjoyed the video, if you like the content, do share it, do like it, and I wish you all the very best. Take care. Signing off. Bye bye.